Rohr here with an early global view on Monday, October 6, 2014. It's currently 7 a.m. U.S. Central Time, and it's a bit of strength in the equities again, but also in the fixed income this morning. Kind of interesting. And we had quite a bit of weakish macro data still overnight that affected these markets. And when we ask what all this means, it means that as of Friday, we saw the S&P 500 future, this is the hourly on the left, 30-minute on the right, on the short-term view, head out above the upper runaway bands on the 60-minute and 30-minute MACDs. Now, the somewhat sideways churn later on in the day left the 30-minute MACD back down toward its upper runaway band, but the more important one is the 60-minute in any event, and when they're out above there, it leaves room for the market to strengthen further, even if it feels like it might be stalling at times. And lo and behold, that's just what we've got this morning. From the finish at about 1960 on Friday, this market is up another $6 to about 1966, which puts it back up toward the failed 1970 up break from when it was churning up into the even more important 1975 to 78 area, which was some pretty hefty weekly chart congestion back in July, and we'll be revisiting that when we look at the intermediate term view. But for right now, the bulls still look like they're in charge of the market. And it's just interesting to us that the entire downswing from the contract high that was also right up near the previous lead contract high from the September contract before it expired, right up here at 2013 area, Fibonacci two-thirds retracement is right in that 1975 to 78 zone. So we're still going to consider that upper 70s to maybe right about the low 1980s, where the failed up break was, going all the way back to the 24th. That's going to be the key resistance, even as we allow the market might strengthen further. Near-term support is the up break above 1954. That includes a couple of Fibonacci levels. And of course, as you know, 1955 to 50 was a very important congestion zone as well, that we had said had a tolerance to 45, and those are still your key lower supports if the market should come under pressure. And that pretty much does it for the short-term view of the S&P 500.